Hey everyone, it's Amit. So last week I did a video on ARK investments and its relative performance to the S&P 500, both from a short-term as well as from a long-term perspective, just so that an individual investor has yet another data point in terms of evaluating whether they want to include ARK investments into their overarching investment strategy. So if you haven't already checked that video out, definitely go check it out. I'll include a link for that up above and include that in the description below as well. Now, one of the key takeaways from that video was a relatively higher expense ratio that ARK investments has relative to that individual investor who may potentially be considering entering into the S&P 500 purely through ETFs or index funds, and that kind of like makes sense, right? ARK Investments is an actively managed fund. When you have an actively managed fund, you're obviously going to have higher costs associated with running something like that, and those costs, of course, need to get transferred to the individual investor, which is what basically drives the higher expense ratio, if you will. What I decided to do, though, for this video is, I wanted to take a look at some of the individual stocks that ARK Investments basically holds, such that we can make an assessment on whether we want to include some of these individual stocks into the speculative portion of our own individual portfolios. And none of this is intended to be financial investment advice, right? Don't take my word for it. I'm not a financial advisor. I'm specifically not your financial advisor, if you will. So let's get into it. Let's talk about some of these individual stocks. You see in a spreadsheet here, okay? So the first thing that you're seeing on this spreadsheet is what I decided to do was essentially list out the 5 ETFs that ARK basically has, and we talked about this in the last video, which are the ARK Innovation ETF, the Autonomous Technology ETF, FinTech Genomic, and the Next Generation ETF. And then what I decided to also do was list out the top 10 holdings within each of these ETFs, right? So these 10 are the holdings for the ARK Innovation Fund, if you will, right? And I extracted all of this stuff out from the website for ARK Investments. The other thing that you'll see is there's some highlighting, right? So some of these have yellow, some of these have like this orangey color, and anywhere where you see like the same common color coding, what it basically reflects is that that particular stock is held in multiple different ETFs owned by ARK Investments, okay? So as an example, Tesla is a part of the Innovation Fund, it's a part of Autonomous Technology and Robotics ETF, it's also a part of their Next Generation Internet ETF. Same thing with Roku, okay? So Roku is a part of their Innovation ETF, and it's also a part of their Next Generation Internet ETF. The other things that I listed out here is their market price, and this is market price as of Friday, 2/19/2021, okay? And I also listed out the 1-year return for each of these stocks, if you will. Obviously, these are 1-year returns, so this is from like approximately 2/19/2020 to 2/19/2021. Then what I decided to do was do a couple of things, right? So I essentially dumped all of this into this spreadsheet. I filtered it based on returns, right? So based on this 1-year return, if you will. And then the other thing that I decided to do was, of course, take away all the duplicates, because I don't think we want to see Tesla listed 3 times for all intents and purposes, and remove all the commonality associated with a lot of that. The other thing that I wanted to talk about briefly on this video is when you look at the spreadsheet, there's a lot of stocks that they essentially own across those 5 ETFs, right? I mean, you're talking about 10 apiece. There's obviously some duplication, right? But you're looking at about 35, 37 stocks deduplicated, if you will. So what I decided to do was maybe we'll just focus on the top 10, if you will, right? And then just go from there. And then if it comes down to looking at some of the other stocks, we can just definitely spend time on that in other videos, perhaps. So anyway, so everything that you're seeing here with the number coding is the top 10. Anything with a gray is essentially what we won't spend too much time talking about in this video. We may touch on some of them just really briefly. So the one thing that I quickly noted when I looked at a lot of these stocks, right, is they essentially fall within a few pillars, okay? So some of them are essentially a cryptocurrency or a Bitcoin sort of play, right? So that's the one pillar that they fall in. The other pillar that some of these fall into is that they're all like bioscience or healthcare related in some way, shape, or form. And then the third way some of these are falling in, they basically fall into the notion of like a technology related thing, which is what we would sort of expect, because all of these sectors have had the most significant run up in the last year anyway. There's also gaming in here, which we'll talk about briefly in this video also. So when I was looking at these individual stocks, we'll talk about those from that sort of like pillar perspective. But when it comes to something like Silvergate, right, which is row 1 here, and also when it comes to Grayscale Bitcoin Trust, right? This number 5 here, both of these are essentially Bitcoin related or cryptocurrency type of plays. So what happened with Silvergate is they essentially do have a first mover advantage. They enabled real-time clearing of transactions, and when you have things such as cryptocurrencies, which are basically traded 24/7, 365 days of the year, you having real-time clearing of transactions is definitely a huge first mover advantage, and Silvergate has been running on that for a very long period of time here, okay? So then the question really becomes, when it comes to Silvergate, right, what do we think about the other banks? Are the other banks going to catch up and remove some of this first mover advantage that they have, which I believe will be the case, largely because these larger banks are a lot more capable of, closing out on some of these first mover advantages, particularly when it comes to smaller companies such as Silvergate, fairly quickly, okay? So that will essentially go away, because when we're thinking about investing into these stocks, we're thinking about what may happen going forward, right? We're not necessarily thinking about what already happened. And if you take away that first mover advantage play for it, it becomes a matter of what else can Silvergate essentially support, and what they're essentially supporting is the cryptocurrency game. But for all intents and purposes, you can get cryptocurrency type of exposure through Grayscale, right? Or you can get cryptocurrency type of exposure through Square, or potentially even through PayPal. And of course, that's not what's not listed here is you can get cryptocurrency exposure directly through things like Coinbase and buy it directly there. You can buy it off the exchanges and put it in a hard wallet, if you will. So there's multiple different ways of essentially getting exposure to something such as cryptocurrency. Now, I'm largely an advocate of having a hard wallet for all intents and purposes when you buy your cryptocurrency and storing it in that way, so that you essentially hold the keys for it. So when it comes to something like that, and just thinking about this looking forward a little bit, and I probably would not put all my money into something such as Silvergate, but obviously you have to do your own research associated with it. Now, from a traditional measures perspective, right, when you think about price to earnings, price to books, so some of your return on investments when it comes to your anticipated earnings growth, for all of that, Silvergate is currently overvalued. I don't want to spend too much time on overvalued versus undervalued, because in the marketplace that we're in right now, these stocks are all running, right? And it's very hard to find any quote-unquote undervalued type of stocks. It's almost like impossible to find those. So that's, one indication of potentially a frothy market, if you will. And the other thing I don't want to spend too much time on is, are a lot of these stocks potentially profitable or not? Because when it comes to some of these high-growth companies, what matters more is revenue growth as opposed to something such as earnings growth, okay? So that is not specifically applicable to Silvergate, but just know that that is an underlying fact pattern when it comes to some of these other stocks. So I guess to cut to the chase, when it comes to either Silvergate or Grayscale, right, my underlying notion is I probably would not specifically invest into either of these. Then the next question comes to like Pacific Biosciences of California. Okay, so this company is involved in the design, development, manufacturing of sequencing systems, right? So this is your DNA sequencing and that sort of thing, which is obviously a significant component of the future when it comes to medical treatment, understanding genetics, and that sort of thing. It, of course, is not as much of a growth story as what potentially Twist Bioscience Corporation is. Okay, they also are doing synthetic DNA-based products. They are unique, or they are absolutely different than Pacific Biosciences of California. But with that said, they do have a better or a higher growth prospect over the long term relative to Pacific Biosciences of California. So when it comes to this healthcare space, particularly, if you will, right, I would prefer to go down the path of picking a higher growth story than a lower growth story from an anticipated future state perspective. But now there is another one here, okay? There's also this Fate Therapeutics, okay? This is also, this one is undervalued and it's also unprofitable. When it comes to something like this, they're primarily focused in cellular immunotherapies and are very focused when it comes to things like cancer. Of these three, right, which are all sort of like in this healthcare space, albeit they're all unique in some way, right? One's focused on cancer, one's focused on DNA sequencing, so they're all unique in that regard. But the one with probably the best investment thesis is really Fate Therapeutics, as well as Twist Biosciences Corporation relative to something such as Pacific Biosciences. Now, from an individual stock perspective, of course, you could be saying that, well, this is giving me too much exposure to have two stocks into this particular game, but they are unique enough or different enough, with one of them focused more on DNA sequencing and the other one focused more on cancer treatment. So it potentially could make sense to have both of those in terms of including in an investment portfolio. So then after we're done with that, right, then the question becomes is what other sectors are essentially also covered in this top 10? Well, the other one that's covered, which we talked about briefly right at the start of this video, is some of the stuff around digital gaming and entertainment, which is where this whole C Limited is essentially falling in. The C Limited is essentially the one that is focused on digital entertainment, e-commerce, it's focused on gaming, it's focused on all of that type of thing, and it's also had a significant growth rate over the last year, okay? So the key thing to note with C Limited is that it's good with the regard that, it's got so much focus on, gaming, which is obviously huge. But the other part of it, which is also makes it a very desirable type of stock, is that it's got a significant amount of exposure to the international market, okay? They have very limited United States presence, as an example. It's got more exposure to Southeast Asia, Latin America, rest of Asia, right? So it's got a lot of exposure when it comes to something like that. So now, obviously, when it comes to gaming, right, there may be a concern that, wait a second, once this whole pandemic thing essentially gets resolved, is there going to be as much of an exposure to gaming potentially after that? I mean, I would argue that there would be continued exposure to gaming, but if you do have some consternation when it comes to something such as that, just know that they also have a significantly new online shopping marketplace that they're basically creating in Singapore as well, which is going to be very, very highly desirable in that regard, okay? So especially when it comes to things like, when it comes to Asia. So this particular stock, there is a lot of potential aspect of, being a very interesting type of play, and it would be something that I personally would potentially consider as a part of my portfolio. Now, again, this is overvalued, so if you're looking at it in terms of any of your metrics, price to book, price to earnings, returns, things like that, this is going to be over-indexed as it relates to any of that, but it does have a good revenue and earnings growth story associated with it, even from a prospects perspective looking ahead. So that's a bit on C. We talked about Twist, we talked about Grayscale, we talked about those being particular, Twist being something that we may want to look into. Grayscale, not necessarily, because at least for me, I've got crypto exposure through different means. Then it comes to, your technology plays, right? So technology play being Tesla, slightly different being Roku, right? Slightly different being Pinterest, but they're all essentially falling into this whole technology type of landscape, if you will. I know a lot of people put Tesla into that whole autonomous vehicle thing, and it's not necessarily a technology company, but in my mind, it's technology first, okay? It's technology first, automotive second. At least for me, I've not spent too much time talking about this because I think when it comes to something like Tesla, everyone knows about it. Everyone's got their own thesis around it. Tesla has had a significant pullback over the last week. And, it kind of goes through these cycles, if you will, okay? So if you're a believer in the clean tech space, if you're a believer that Tesla has got a significant growth story ahead of it, which I so happen to be, I think they will continue to innovate in this particular space. So it's very hard to discount Tesla in any way. But with that said, I personally am a holder of Tesla even in the current state, but it is something that I potentially, if I were not a holder, would consider including into my overarching portfolio. The next one is Roku, okay? So Roku, if you're unfamiliar with it, they provide a TV streaming platform. You can do all sorts of things associated with that. They also play in the platform and player space. So TV streaming, Roku, it's obviously had a significant run-up. One could make an argument that this potential run-up has been due to the pandemic space. Now, there's so much competition when it comes to TV streaming platforms, okay? So there's like HBO, there is, of course, your traditional stuff like your Amazons, your Netflix, you have all of that. You've got Apple, you've got a whole bunch of TV streaming sources. So it just becomes a matter of how much do you want to engage in this particular space. And eventually, when the pandemic goes away, are people going to have the time to be doing all of this streaming? I don't necessarily see a potentially nice outlook when it comes to something such as that. Of course, when you look at the valuations, it is overvalued just like everything else. But, due to some of those reasons where the pandemic is kind of like hopefully coming to an end here in the next few months, do I want to consider investing in something like Roku? Probably not. When it comes to Pinterest, Pinterest, I think a lot of people are very familiar with as well, but you can put like pictures and stuff online. It's got a significant growth story when it comes to international. Now, in my mind, this is another social media type of play, okay? When it comes to social media type of plays, we always have to evaluate whether it makes sense to include something like that into our portfolio. I think it's a very crowded space, so I'm potentially a little apprehensive around it, so I wouldn't necessarily include it in mine, but it's of course, everyone has to think about it from their own perspective. And the last one is just around Materialize. Okay, so Materialize is very focused in the 3D printing space. If you believe that there is a significant market and significant growth prospect when it comes to 3D printing, this could be a great avenue to get some of the exposure associated with something like that, and they play across the globe. Okay, so personally, I think there's a lot of opportunity when it comes to 3D printing as it continues to get perfected, and there's a ton of use cases around it. So I would potentially look or invest into Materialize as well, primarily from an individual stockholder perspective. Now, again, this is not intended to be financial or investment advice. As you look through these stocks, definitely let me know in the comments below, what you consider potential investment opportunities as well. As this whole ARKs thing continues to get legs here, I am curious to be following what Cathie Wood is doing essentially on a weekly basis. What is she talking about? I know she's talking about some space-related investments as well. I'm pretty excited to see what she essentially says in that. So if you enjoy the contents of this video, hit the like button. That'll definitely get this thing run into other users as well. Subscribe to the channel, and I will see you soon.